Okay, so this then is our trade up here, people. I'm going to bring you the red guys. I'm going to teach you about proper order execution. I'm going to teach you a great deal about proper risk management. I'm going to give you an insight into market knowledge you will not believe. Okay? You guys got to bring the blue stuff. First off, you have to have the confidence that you can do this. This is learnable. It is doable. Okay, remember what I told you about keeping a positive attitude. It can be done, but only if you're willing to do it. You got to have a good frame of mind, like I say, a good positive approach, because trading can get you down. You're going to be out there making decisions, and right now, as beginners, you believe that you're going to make 5 out of 10 calls right. Well, Mike, it's the flip of a coin. Probability says I'm probably going to be right half the time. Probably not, believe it or not. But think about this for a moment. If you can make 10 cents on one trade, you can lose a penny on the next 9 and still be profitable. It's keeping those losers to real small that allows the profitability, the profits to run, okay? And you're going to have to do this with a modicum of discipline. Now, my oldest student I've ever had is a guy named Fernando, and he was 87 years old when he took this class. Fernando is doing well. He lives in Spain. I knew he would do well because every morning at 87 to this day, he gets up and does 2 hours of calisthenics, okay, stretching and exercising and stuff at 87. Why? Because he started doing it when he was 7 years old. Why did he start doing it when he was 7? Because he was a professional bullfighter. People, that requires discipline. I don't care what you think about bullfighting, but if there's a very angry large animal trying to rip your intestinal tract out with its horns, discipline, calisthenics, knowing how to stand exactly right is very, very important to your livelihood, okay? And I don't mean making money. I mean staying alive livelihood. The last guy over there is experience and instinct. That is what I cannot give you in this classroom situation. One of our instructors, Spencer Sheldon, is also a flight instructor. And when he takes a new pilot or wannabe pilot out, he always tells them, I'm going to hand you a bag full of good luck and an empty bag of experience. Your job is to fill up the experience before you run out of good luck. Okay? And to some extent, that's how trading is. I'm going to give you all the tools. I'm going to put you on the right path. You're going to walk down that path. You're going to stumble occasionally. The trick is to learn from it. We have another cliche. If you lose the money, don't lose the lesson. Always come away from a trade a better person for it, whether it's financially or up here in your head. Now let's get into the secret sauce, okay? The trading secrets. And they're not what you think they're going to be. They are concepts, things like patience, diligence, and we get the computer to hurry up here. We'll have discipline, hello computer, hard work, and determination. People, trading is about patience. We don't go out there and jump every trade. We don't try to make everything work. We're looking for a high probability situation. We're looking for all the odds to be stacked in our favor before we open the trade. Now, here in California, I live in Huntington Beach, which is known as Surf City, you know. You've all seen a surfing movie or know something about the sport. What do these guys do? Do they ride waves all day, or do they mostly sit on a board and bob up and down and talk to each other? And they're always looking over their shoulder. Oh, here comes a good one. Then they paddle, catch the wave, and have their ride. And that's true, people. If I told you to go down to Huntington Beach at 6 a.m., grab your board, and I want you to ride every wave down there and come back at 6 p.m. Well, I know 2 things. Well, I know 3 things. First off, you're gullible if you go do that. But the first thing is you're a real tired puppy, aren't you? You've been paddling all day long. The second thing I know is you had a high percentage of bad rides. You didn't wait for the good waves. You got to be patient. One of the best ways to make money in this market is knowing when not to trade, when to sit on your hands. Okay? Diligence. People, diligence is getting up and going to work each and every day.
Plenty of time here, all right? So as I was saying, price doesn't even get up to the strongest level of defense. The bears are rejecting the bulls. Even before that level, price keeps on making lower highs, alright? The dynamic area of resistance is not being breached. Price has gone nowhere near the 100. The 100 has never been challenged. Well, upon that rally to the upside, spurred by the news, fueled by the news, we begin to see, red bars. And red bars.
Every night for me, my schedule is from 7 o'clock until 8:30. I do my homework. I read financial things. I go out and I do stock research. I look at charts. I look at different pieces of data like volume and moving averages on the favorite stocks that I trade. I do that every night except Friday and Saturday night, okay? Because I have to have a life too. I want to go out to dinner, I want to go out to the movies, and so do you. But the point is, the other thing, I get up every day at 4:45. I get up on Saturday and Sunday at 4:45. The market isn't open. Why do I get up there? Well, that smacks of discipline. I need to be disciplined in what I do. If I break down my discipline and I sleep in too long on Saturday or Sunday, I might do it when I'm during my trading time. And I don't want to do that. I want to be almost a robot because that's how I make money. Okay, that's what ensures that I maintain my lifestyle. It is hard work, people. I have to admit, even though I enjoy it, there's a lot of stuff I read that is just boring. Okay, but you have to go through it. You have to grind it out. You got to find out what they're telling Joe out there so we know how Joe is going to react. We can't just assume our knowledge base is enough. Ready? And we have to have some determination. People, I think it was Henry Ford that said, it was Edison that said invention is what? 90% perspiration and 10% inspiration? I don't care. If we have a big pile of bricks over here, and you want to put those bricks from this side of the room to that side of the room, I want you to use your intelligence. I want you to use your education. I want you to think about what's the most efficient way to move those bricks. But while you're thinking about putting in a conveyor belt and an overhead tram system or running a forklift or whatever, pick up a brick and put it on the other side of the room. By the time you have up a really good scheme, guess what? Determination will have moved those bricks. Determination, a little bit of sweat will move those bricks. You can be as cool and clever as you want, but if you get right to the job and you put your nose to the grindstone, you'll get it done. And if you haven't had a great success in your life, maybe you ought to look around and find out if determination might be one of your downfalls in your personality. The last thing here is you've got to be willing to let time do its work. People, it's called seat time. You've got to be in front of the market as much as you possibly can. There are patterns out there. They don't repeat perfectly, but they do repeat enough for us to take advantage of. But you don't see them if you only look for 15 minutes. You've got to be there for hours, particularly as a beginner. You've got to work this. It's not a get-rich-quick scheme, guys. Okay? It's gathering information and putting a plan together and then acting upon that plan. Questions so far? Yes, Jim?
Mike, is there any magic bullets out there as far as software?
The question for everybody, is there a magic bullet either in software or in a system or anything like that? And the answer, unfortunately, is no. Okay? There's a lot of different black boxes, we refer to them as. Some of them actually are a box, some of them are just a theory, okay? But none of them work consistently. First off, if you could buy it, why would they sell it if it worked? Okay? Why do they sell it? Because it doesn't work anymore. There are some concepts in computer right now where the computer can possibly learn as conditions change. But by and large, black boxes are mathematical algorithms that are written at the time based on certain set conditions. Over a course of months, and certainly years, conditions change. Unless this guy is constantly updating his algorithms, okay, then the box, the system, whatever it is, becomes less and less and less. People, I've been doing this for 25 plus years now, is either a semi-pro or a pro. I've kept my ears to the ground pretty well. I've never found the golden arrow that slays the dragon of poverty. There is no magic button. There is no perfect system. What there is developing a style in you. I can tell you exactly how I trade. I'll give you exactly what I do, but it won't work for you because you're not me. It's just that simple. You do not perceive the world as I see it. Maybe close. We look up here and we say the letters at the top up there are yellow. Okay, and we all kind of agree they're yellow. Right up until I say they're Corvette yellow, and Trish says no, they're dandelion yellow, okay, and Bill says no, I know a buttercup yellow when I see one, okay. As we start to focus in, we start to see how our perceptions are different, okay, and so that's one of the big fallacies in books and stuff. When you read about these great gurus of trading, some of them are very smart, clever people. Some are, of course, just writing a book to sell books. They're all doing it in their own best interest, not in yours. But you can't adapt and adopt their methodology perfectly. There may be some gold nuggets in there that you can pull out to use and adapt to your way of thinking, but there's no exact answer.
Maybe this is not on this subject. I don't want to get off of this subject.
Well, then we should stay on the subject.
Well, how do you pick a stock?
How do you pick a stock? Okay, well, we're going to spend a whole lot of time on that, Al, and we're going to go through an exact criteria. Surprisingly enough, people, okay, I'm going to say something to you. You only need to learn how to trade two stocks. Okay, you need a strong stock in a strong sector, so when the market rallies, and you need a weak stock in a weak sector when the market sentiment goes down, and we're going to short that. Maybe you need an understudy for both, so that if your first one gets sick, you can bring up your second one and be ready to trade the next day. What do I mean by sick? Well, if your stock goes flat. As traders, we don't care whether the market goes up or whether the market goes down. Just let it go. What we don't want it to do is go flatline on us.
In other words, you want a volatile stock?
Within reason, and I'm going to give you those actual parameters. Okay, let's step into a different chapter here. As time goes by, the industry is slightly changing, but we like to refer to the online brokerages as what we call level 1 information and direct access brokerages as level 2. Now, as time has gone by, some of the level 1 brokerages have adopted some modicum of level 2 information, so maybe they're now level 1.5. But to put it more succinctly, when we talk
also technicals, okay? Like I said, the trick of this technique is to ask yourself, if there was no news coming out at this time, okay, let's imagine we have no news coming out at this time, would this be a valid entry, okay? If entering short at this level would be a valid short entry? Well, the answer is yes, okay? We've already seen that we have a clear downtrend, that price has reached the dynamic area of resistance, that we've broken the retracement trend line. Not only that, but also we've broken it. Now we're going through the pullback aspect, and well, hopefully we will get the continuation aspect too, okay? So entering short at this level from a technical point of view would be a valid entry, all right? So
it says online trading. Level 1 only. Sometimes we see level 2, but generally we do not get to use it. Well, Mike, what is level 1? What is level 2? I'll show you the information here. Just keep this in the back of your mind right now. The biggest problem is that the online brokerages use what we call a trade desk situation or scenario. When you go online to your computer and you hook up with your favorite brokerage, and like I say, pick a household name, okay, TD, Waterhouse, Merrill Lynch, Schwab, any of them, Ameritrade, E-Trade, and you put an order in. I want to buy 100 shares of Acme, good for the day, at limit or at market, and then you hit next, and the page pops up and it says, you are buying 100 shares of Acme at market, good for the day. Please put in your password. And you put in your password, and then you hit the submit button, huh? Well, I'll hit an enter key, but Mike doesn't submit. Sorry, small joke. Anyhow, and then what do you have to do? You have to go to another page, don't you? You have to go and see your orders, and it says order pending, refresh, order pending, refresh, order pending, refresh, executed, and the price. Okay, and you go, wow, Modern Electronics, what is happening? Is that order going to the market? No way. You have just sent a glorified electronic email to the trader.
This order very quickly. That's it. You're good. No worries. You're not positioning this market. If they go, if the price spikes to the downside, you are filled at the right level from a technical point of view. All right. Once again, you are not trading off the fundamentals. You are trading off the technicals. Yes, having your trade spurred or boosted by your or you know, strengthened by the announcement coming out in the market. Okay. I'm going to be posting now the video, guys. I will resume the video 1 minute before the news come out in the market. You will see how I place a sell stop order right here, and you will see how the what's the final outcome of this trade. I am fairly confident that if the news spike the price to the downside, I will be writing a sound entry on this trade. Okay. Alright guys, I'm pausing the video now, and I will keep you updated. Bye bye. Hi guys, and welcome again to the second part of the video. The news have just come out, and well, one of the two scenarios that were possible. Remember, one of them was price spiking to the upside, in which case we would have cancelled the entry, the sell stop entry, and well, the second possible outcome of this scenario was what's actually happened. We've had the spike to the downside, and as
They just look at it for a couple of seconds. 2 seconds. The price of Acme was $20 by 20:05 2 seconds ago. What is the price now? Ah, things may have changed, huh? Okay. Well, if you're aware of that, well, that's okay, but that's called slippage. I wanted to buy it for 20. I ended up with it at 20:05. Yes, sir.
Do you eliminate some of that when you use a limit order?
Yes, absolutely. The question is should we use market orders or limit orders to limit our slippage? And the answer is use a limit. As beginners, I want to see you guys limit in and limit out under control, and when in jeopardy, when in panic, when in emergency, we'll use a 911 market order to close our transaction. But certainly as beginners, I want you guys using limits. Now the problem with the limit order is what? You may not get filled, but better money missed than money lost.
But then that kind of covers us as opposed to the direct access, the Ameritrade thing, if we go in with a limit.
Right. But with direct access, you can see everything that's going on. So as you become more sophisticated, there's going to be times when you will use a market order, but you'll be using it far more safely. When you send a market order to a brokerage, people, you're writing them a blank check. Okay? And that's something you have to consider. So they send it to the market for their benefit when they want to. Now, let me ask you guys a question. Okay, you go out to, and I'm not saying any of these people are bad people. I'm saying they have the potential to be bad people. Okay? You go on and you have Acme Brokerage, I'll use that generic term so I don't get anybody upset, okay, and you say, Cisco, get me a quote. And the thing pops up, and whatever the price of Cisco is, it's $25 by 25.02. You go, wow, that's just where I thought it should be. How do you know that that's the real price? What if they just said it was $24 or $27 and the real price out in the market was $25? How would you know? Do you ever call up a second quote and compare them? No. You just believe You trust, you hope that your brokerage is doing good by you. And they probably are. But as they say in law, if it has impropriety in it, then if it could be improprietous, it is impropriety, okay? And you got to be careful about these things. We are going to use data that comes from the source, not from the brokerage. I want to see it. I want to see it real time. I want to see it streaming. I want to see it changing, okay? I want to see the prints, and I want to see the quotes, and I want to see that they're correlated. That way I know I'm getting the right price. That make sense? Not yet? You have that clear as mud look on you. I can't honestly answer that. The question is if you're seeing level 2 from the NASDAQ, then you're seeing reality. Okay? If you're seeing a level 1 quote, okay, then you don't know where that source is. And that's what I said at the beginning of this. The problem is that some of these brokerage have starting to show you level 2. I'm not saying that they're all crooks, people. I'm saying that what? They have the potential to slip bad data. Do they? I'm putting this onto tape. I am not going, you might be an attorney in here. I don't want to get into a slander suit.
At some point in time, on a break or something, to look at what you pulled up the market earlier, and then actually pull up my account on the screen and
See if they're close? Sure, well, I'd be delighted to do that for you.
I might just be curious.
Sure, and you should be. You should be protecting your money at all times, people. I'm not saying that everybody out there is bad. I'm saying that you need to keep skepticism and cynicism in your trading. You keep love, harmony, and trust in your family. Okay? But always be skeptical. Be always critical. Because it's your bucks, people. You worked hard for them. Keep it. You ready? The second thing that they can do is what they do mostly, and that's called internalization. Again, this is perfectly legal, but your brokerage isn't trying to help you. What if you called up your brokerage and you said, you're my favorite broker there, Herb, okay? I'm going to buy 1,000 shares of Cisco today. And your broker says to you, well, Bill, we're going to be dumping all of our holdings in Cisco today. Why don't you wait and buy it tomorrow? You'll be able to get it at a cheaper price. Now, would that be a good broker? Do you think they're going to say that to you? No. So when you go in there and you buy Cisco, if they bought Cisco at $18 and it's now at $23, they're very delighted to sell it to you at full retail. Do they give you a discount? The Cisco is trading at 20 by 2003. What are you going to get filled at? 2003. They're not even going to give it to you at the 23. They're not going to give it to you at 21. They're not going to give it to you at 19. They're going to get full tariff for it, okay, because they're working in their best interest. This is called internalization. What if you had a large block of Acme or Cisco or one of the other stocks, and you said, I'd like to sell that, and they fill it instantly? Well, they're buying it, okay? If they're buying it, does that tell you you may have made a mistake? Why would they buy it if the price was going down? No, they think the price is going to go up. Maybe not this instant, but in the foreseeable business future that their plan revolves around, they see it as a profitable trade. Let's talk about that for just a real quick sec. Have you guys ever thought about trading? I mean, we go on here, we're so inhuman, we're so desensitized because we're with computers. But when we buy and sell, we are making a perfect antithetical transaction. I walk up to Cy over here and I say, Cy, I'm selling Cisco. Would you like to buy some? And he says yes. And we agree upon a price, $23, and he hands me cash and I hand him a certificate. We smile at each other, we shake hands, and we walk away. And both of us start laughing up our sleeve at the other one. That moron, he bought it. I can't believe it. This thing's going down. And Cy's walking away going, that idiot Mike, I can't believe he's let this go at such a cheap price. It's going up. We are completely in opposite directions on every transaction. We are
to that level. We retested it from below. From there we broke the retracement trend line, and we continued making new lows, breaking yesterday's low and the day before yesterday's.
right. We don't know. Only time will tell. We can estimate, we can calculate, we can analyze, but we don't know. Ready? The third thing that the broker-dealers do, and this is what has the SEC hopping up and down mad, is they actually sell your orders to third parties. Now, I haven't checked recently, but the going rate just a couple of months ago was $17.50 per thousand. So you go in there and you say, I want to buy 1,000 shares of Acme, and your brokerage sells it to a third party. Okay? Your brokerage receives $17.50. They got your commission, they got $17.50. This other guy who paid $17.50 for your 1,000 shares, is he going to work real hard to help you, or is he going to try to work to get his $17.50 back first? Yeah. I mean, you're kind of down the old food chain there now. Alrighty? Your brokerage got...
Break the retracement trend line and continuation, okay, making new lows. That's a confirmation that the breakout has actually gone through, okay, has delivered. Okay, if this breakout has delivered, okay, and we enter right there or somewhere in there, I can't remember, and we've made we've confirmed this breakout, it is safe for me to move my stop down from here. No, from here. Sorry, that was where my stop loss was placed originally, down to here. Okay, because this level of support, of resistance, well, former support, now resistance, has already been confirmed. Okay, it's been retested and it has worked. Okay, it has held the bounce. Okay, so now we can safely.
He may sell some for himself short and then put your order in to help his position go down. And just the opposite, if you all put in buy orders, he's got a 100,000 share block here. He drops it into the market. It's demand, huge demand. Price is going to go up. What's he going to do? He's going to go out and buy some for himself. This is called front running, okay? And if you haven't read the newspapers or listened to the radio recently, there has been a plethora of this stuff happening, okay?
Intraday levels of intraday or intra-week, depending on the time frame you're working on. But nonetheless, you want the trigger chart to continue breaking and retesting former levels of support and resistance, okay?
They pay it as a settlement without admission of guilt. Okay, they've never been found guilty. Okay, they've been accused, and they say, "Well, let's make this go away. We don't think we did anything wrong, but we're willing to give you $100 million." Come on. Okay, and at the bottom down there, you can see it says, "Not always the NBBO." What does that stand for? National Best Bid and Offer. Okay. In other words, again, if you're only looking at a level 1, now you have streaming data, you're probably closer to capital T truth. But if you only have a level 1, how do you know that that's the correct price? And certainly, if it's not streaming and you don't hit the refresh button, every second it becomes less true, doesn't it? I mean, you bring it up onto the screen, you look at it, it was true in that instant. But 5 seconds, 10 seconds, a minute from now, unless you refresh the screen, it's not necessarily the national best bidder offer. These prices change rapidly. And you say, I want to buy it for 20, and you get filled at 20, you're a hero. But what if the price is now $19.95? How would you know? Oh, I could have waited 10 seconds and got it for a nickel cheaper. Well, again, on 1,000 shares, people, that's an extra $50 in your wallet. And $50 is a nice lunch for one. Huh? I do things on valuation, by the way. You can't tell, can you? Okay, let's talk about the other side. Direct access trading. Well, with direct access, we go around that trade desk. We don't let somebody handle our order. We're going to put it through a broker-dealer's computer. Their computer is going to check it to make sure that we're traders or clients in good standing. We're still going to pay a commission. We still don't get to beat the commission, people. Alrighty? And that's all that's going to happen. If we meet the requirements, we have funded account, we have a legitimate account, We go right from their computer into the NASDAQ, and you can actually see yourself in the market. Okay, when you post to buy, just like a market maker, or offer to sell, you will actually see yourself in the market. I'll show it to you. You ready? By being able to see yourself in the market, we are therefore effectively advertising for ourselves. Has anybody thought about what you want to be when you grow up? Okay, when you become a trader, what is your business? What is your generic occupation? I mean, like, are you an electrician? Are you a plumber? What are you if you're a trader? Anybody? Haven't thought about it, huh? Well, what do you do for a living?
Gather information.
Is that what you do?
Anymore, okay? It's just showing that momentum is fading away from this swing, okay? So don't hesitate to exit the market, bank some pips. We entered there, we've exited there, we've banked some pips, and moreover.
Is that what a merchant does? Oh, so maybe we're merchants. What are merchants good for? Ease of transaction. We provide liquidity in the market. When you guys want a glass of milk, you don't jump in your car, drive out to Dairyland, climb over that barbed wire, muck through the mud, kneel down, and milk Bessie. You go over to your local grocery market, whether it be Albertsons or Vons or Ralph's or Kroger's or whatever's near you, okay? And you go to the back of the store, and there's Cal in a carton, okay? That's where you get your milk. It comes in a square thing, you know, and you pay, you know, $2.50 a half a gallon or whatever the going price is. How did you know to go to that store? Did you didn't do it psychically, no. Trish said, they advertise. They send you out circulars. This week only, potato chips half off. Buy your beer here and we'll throw in some hamburger buns. I don't know. Okay, they come on the radio, the television, and they tell you that milk is for sale. So if you're going to be a good merchant, would it be good for you to advertise? Uh-huh. Now, when you place an order with your broker-dealer, if they sell it to you out of their inventory, they need to replace it. Do they advertise for you or do they advertise for themselves? Ah, they advertise for themselves. Very good. Okay? So we need to be able to see ourselves, and if we really want to buy wholesale, okay, we can actually post and buy at the national best bid or sell at the national best offer. We can be a market maker, just like Merrill Lynch, just like Goldman Sachs, Lehman Brothers, Dean Witter. Dean Witter isn't around anymore. Okay, with level 2, we also see the depth of the market. And of course, as we're going to talk just in a second about level 2, I'll show you what I mean by that. Okay, but we can start to see who's doing what to whom, how much they're doing, what their intentions are, and how we perceive it. We'll never know exactly what they're doing, but how do we perceive it? How does the public perceive it? Remember, we got to get back to the psychology. So we can use either level 1 or level 2 as long as we cut out that trade desk. If we can go directly to the market, then we are direct access. Everybody with me? Now, here is a typical level 1 screen. Okay, and if we look up here, we can see that the last trade, the price was $19.80. Okay, the current national best bid, according to this, is $19.80, and the ask price is $19.83. Now, again, the moment I brought this up, that price may have been correct, but in the
Intraday support level, breakout, retrace, pullback, continuation. Once again, we could have moved our stop loss to this level, but I think I was already out of the position. I think I was already...
if there's downward selling pressure, right? If there was buying pressure, they'd be paying 83s. So we can start to actually see this work. But again, this is a snapshot. Yes, all this other information up here is very valuable, and we're going to tear it apart as we get into this course, people. Volume, daily range, 52-week highs and lows, PE ratios, all that. But you guys can see these questions down here at the bottom. What do you really know at this moment? Do you know who's doing the buying? Who's doing the selling? How much, how long, how often? Those are very, very important questions. Okay? For instance, what if I told you that the market makers do not have to show you true share size? What if that 3,600 was just a number? It was.
Trace and retest them from below. Continuation, making new lows, move stop to this level. Okay. Now we make a new swing down in momentum. You see this massive red bar? Okay, new swing down in momentum.
But what if one of the market makers is really selling 360,000 and you're lucky to buy the first 1,000 of it? What's going to happen to your position? If he really is misleading you by saying 3,600 and he really has 360,000, yeah, you're going to buy it at 1983, and when you get your head above water, it's going to be, you know, $18 or $18.50, and you're going to go, what happened? I bought at the top again. So wouldn't you like to know who is doing the selling? Do they have the potential to sell 360,000? If we knew that, would we be a little bit more careful? Yeah, sure. If he can only sell 3,600, well, then I know what I'm getting into. But if he has the potential of selling 3.6 million or 360,000, that's a different question. So let's take a look at level 2. When we look at a direct access platform, we still have all the level 1 information above these pretty columns. But level 2 are these 2 columns here. And I want to talk to you just a little bit about them. On the left-hand side, we can see the bid. Now, people, listen to this carefully. These are hopeful buyers. They're not buying, they're waiting to buy. There's a difference. A buyer is somebody who actively goes out and says, here's money, give me that, and he takes it. Okay? A bidder says, I would like to buy some if you bring it over to my house. Okay, so this is really what? Is this like a one ad in the newspaper? You say, want it, one 1965 Volkswagen Bug, running condition, $500. What has to happen now? Somebody has to buy the newspaper, they have to look into the one ads, they find your ad, they read it, they go, hey, I got a 65 Bug I'd like to sell. They call you up, they make an appointment, they drive the Bug over to your house, you walk outside, you look at it, you drive it around the block once, you say, fine, here's the 500. He says, no, I want 1,000. Who's in control of this trade?
We have to zoom into the, let's say, I don't know, the 30 minutes or even the 15 minutes time frame, okay, to see those breakouts and those retracements, okay. That's the one.
And then he changes the price. What are you going to say? Take a hike. Buzz off. Somebody will be by. I don't want to pay more than 500 for a Bug. I'll just wait till the next guy calls me. Somebody who can read English. You obviously can. It says clearly 500. Now you're trying to stick me up for 1,000? I'll tell you what, kid. I'll make it 525. Give me the pink slip here and I'll give you a ride home. Okay? If you don't like the deal, walk. Is that who? So the bidder is kind of in control in this situation because he set the ad. He only wants to buy, in this particular case, $6.30. He doesn't want to buy $6 and pay $6.31 or $6.35 or $7 or $8 or $9. He wants to pay $6.30. That's it. Everybody with me? Okay. Now the way the bid is set up is the highest buying price is at the top. As we can see up here, $6.30. Okay? As we look down, each color increment decreases the price. So we see 630, 629. If we were to stretch this out, we'd see 628, 27, $6.
We broke this level to the downside. We broke this level to the downside. We pulled back and we had the continuation confirmation. Okay, if let's assume that your final target is somewhere around there. Okay, if price
he still has more power than the average Joe does because at least he's advertising for himself. He's put a sign up that says, I'm willing to buy Acme up here for 1 cent. a guy's walking down the street, doop, 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 and he sees a sign in the window, buying Acme for 1 penny. He goes, well, I have some Acme on me. That looks like a good deal, and he goes in and sells it to you for a penny. Are you a happy camper? Sure, you can turn around and sell it to the market for $6.30 at least, maybe more. Okay, so you're a real happy camper. Does that happen? Not often, but it can. What if you're a Merrill Lynch client and you said, I'd like to sell right now? And Merrill Lynch says, okay, well, the price is $6.29. And you get filled for $6.29. Well, unless you knew that the price was $6.30, well, wait a minute. Isn't the national best bid and offer $6.30? Well, yes, we'll have to go to one of our affiliates.
Before, okay, this was a confirmed breakout. The breakout of this level was confirmed right there. If upon having confirmed it, price actually breaches back up, this whole swing is jeopardized.
If you didn't have the information, you just to say $6.29 must be the price. You trust. Is that true or not true?
Yeah, that's true.
Good. We're going to break you of it, but that's true. For most people, they believe what they see in the newspapers, what they hear on TV, and what they see on their computer screens. And it's not there for your best interest. So what he's asking is what if he's not buying? What if he wants to buy wholesale later? So he's placing an order to buy, to bid to buy at $6.26. What's the point of that? Well, because all the 6.30s and 6.29s and 6.28s need to get filled before he'll get filled. Well, why would we do that? Well, maybe because we looked at our charts and we're smarter than somebody else and we realized the bottom is at 6.25 and we're going to buy it as low as we can without trying to pick the bottom. And so instead of paying $6.30 right now, we're going to wait a few minutes and buy it cheaper later. It's possible that somebody could preference you, as Bill suggested, and sell it to you for $6.26 right now and skip the 6.30s. Why would somebody be willing to accept less money right now? What if they knew something that you didn't? What if he said, well, I'll sell 1 million shares for 5-cent profit to him right now because I just set the timer on this nuclear dirty bomb in Los Angeles subway for 5 minutes. I might as well make a couple bucks on this terrorist attack while I leave.
That would be, an example might be an institution that is unloading a large block. They don't want to advertise by putting 100 million shares on all at once.
Absolutely.
They want to get out without throwing the market.
One of the things that you have to be careful of, people, and I hate to equate trading with gambling or poker, but poker really isn't gambling. It really is a game of skill. Do you understand the term table stakes poker? You can only play with the money you bring to the table. Well, if you put your money on the table and you have $100, you put it all on the table, and I'm a real poker.
So much attention before entering a trade when you don't have your money rolling in the market. Why should you just, like I say, walk away from the computer once you've entered into a trade and once you actually have your money rolling in the heat of the markets? Okay. It's, in my opinion, is like I say, it's just as important to keep following the charts after having taken the entry than actually prior to that. Okay. In order to explain my points and the way I follow the trigger chart, the shorter time frames chart, in order to read price action for my in-trade management. I've decided to take one of my trades from my trading library. I'm going to record the whole thing again just because I don't want to focus on the actual trade. Okay, I want to focus on all the process that goes within the trade. Okay, all those elements of decision taking that goes within the trade from the moment you've pushed the entry button until you've exited the trade. Okay. In this case, it was a trade that I wanted to exploit basically this swing down. Okay. As you can see, it's as usual in all my trades. The moving averages are nicely pointing down, parallel to each other, in order, etc., etc. And I basically entered this
traded the breakout of this sideways range to the downside in the direction of the main trend. Okay, this is the trade I basically wrote. Okay, but nonetheless, like I said, I don't wanna focus on the trading itself, but rather on.
Now, we're going to get into the tactics and strategies of all this. I need to get over some of the definitions so you see how these things, but you'll start to understand that nothing is done without a purpose here. Okay? So does everybody understand that the bid, the highest price is at the top and it gets consecutively lower as we go down? The next column is called name, okay? But on some platforms, you may see it listed as MPID, which stands for Market Participant Identification Number, or symbol. Guess it's not a number, huh? Ready? Now, there are over 500 market makers out there. There's 8 ECNs, there's a couple of UTPNRs, and some other flies in the ointment. What do all those letters mean, Mike? Relax, guys. You pretty much already know what they mean, and they're fairly intuitive. If we look up here on the inside bid, we see SCHB. Who is that? Schwab, okay. Right below it, SBSH. Smith Barney Shearson, huh? How about GSCO at 629? Goldman Sachs Company, very good. Here's a little tougher one. How about WCHV? Wachovia Bank, which was a big bank in the Southeast. They figured they couldn't make money fast enough as a bank, so they switched into trading. Think about that. Okay. Here's one that usually stumps them. BEST. Best. Who is that? Bear Stearns. Okay. But trust me, guys, within just a couple of hours, tomorrow you'll be going, oh, there's Montgomery, A.G. Edwards, UBS Warburg, Knight Trimark. You'll be able to sing them out. But most importantly, you don't have to memorize 500. We're only interested in the
formed, like I say, I had my mouse cursor on top of the exit button. Okay, like I say, was very ready to manually close this trade. Okay, well, thanks God, it actually closed to the downside. Okay, that's always a good indication that the swing you're riding still has momentum. Okay, you've taken your entry, price goes through a moment of consolidation, but that area of consolidation breaks in the direction of the overall trend in the setup chart. That means that the swing you're riding still has some momentum left, some use to profit from. Okay, but look what happened. Barely an hour after that breakout to the downside actually happened. Okay, have a look. We had another triangle formation. Okay, let me draw that properly for you guys. There it is. That's it. We had a flat top triangle. Okay, you see that? We went through an area of consolidation. We were ready to exit if that area broke to the upside. Instead, it broke to the downside. We are still good to remain on this trade. Not too long after, okay, shortly after, we began meandering sideways for another 2 or 3 hours. Okay, that was another decision taking point in this trade. What are we gonna do here? Is it gonna close? Is it gonna break to the upside? Is this perhaps this whole swing down showing again some weakness here? If it does, if it's showing weakness, just exit here manually. Your entry level was around here, your exit level is around here. There is like 60 pips from entry level to exit level. It's not too bad. Okay, it's 60 pips. it's definitely a juicy position. Okay, it's a juicy profit from one single trade. Okay, it's best, at least in my opinion, guys. Okay, it all depends how aggressive you are, but as far as I am concerned, it's always best to walk away from a trade that it's showing weakness. Okay, it's showing some signals of weakness. With that breakout to the upside, it's just it's better to exit at a profit. Okay, in this case around 50-60 pips in profit than actually leave the trade.
Be the next one to get filled. So all these people displaying 630 are equal in the eyes of the market, you know, in front of God and the market and everybody. They're all equal. Okay? But what if this guy up here was showing 6.301? He's paying a little bit more than anybody else is to buy, isn't he? Well, our computers would find him, because our computers will always get the best price for us. Okay? So out of this whole list, we would always find it. We wouldn't know until after the transaction that we actually got filled by Montgomery, and we'd look down at our sheet and it would say 6.301. You go, wow, I was only expecting 3.0, but I got 3.01. I'm a happy camper. I got slipped in my favor. By the way, have anybody ever thought about that? How many people in here have suffered slippage? You wanted to buy it for 20, you got filled at 20.05. Have you ever got filled for 19.95, got slipped the other way? No. If it was random chance, wouldn't you slip a couple pennies one way and a couple pennies the other? If it was random chance? Isn't it funny how it's 100% in their favor? Think about that, okay? We can actually display out to 3 or 4 digits. However, as I am speaking to you right now, the different markets, New York Stock Exchange, NASDAQ, under the guidance of the SEC, are trying to stabilize to at least a minimum 1 penny spread. So we may not be able to split in a few months. Okay? There is also talk, I might add, that there may bring in an inflated artificial spread. Right now we can see up on this stock here that it's 630 by 631, a 1 penny spread. Okay? This happened in March of 2001, excuse me, when we went to decimals. Most of the larger stocks immediately brought their spreads down to 1 penny. Well, they may artificially inflate it back up to a nickel. Why? Well, that would help the market makers. They would make more money per transaction, right? They would buy it at 635, or excuse me, sell it for 635, and they'd be buying it for $6.30. They'd be making a nickel instead of a penny. They made 5 times as wealthy. Well, who do you think gets to make the rules?
All right, especially if you are an intraday trader, you want to know where the battle between the bulls and the bears is meant to be fought throughout today's trading session, and that's for sure these two levels, okay? The 20100 and the 20030, okay? Right there, this double top, this double bottom. That's where the battle, the bulls and the bears are meant to clash onto each other, and one of them is, obviously, as usual, one of them is meant to win this battle. In this case, the bulls, in the direction of the moving averages, in the direction of the main market sentiment throughout the entire week. Seems like the bulls, like I say, are getting the upper hand in this ramble. As I mentioned before, 2 key levels to keep an eye on today: 20100 and 20030 right there. Should the bears win this battle, we would have broken to the downside. If the bulls are still in control, we would have, and in fact we have broken to the upside. I'm liking that. I'm liking how the breakout is taking place, as I was mentioning before, in the direction of the moving averages, in the direction of the intra-week bias. Okay, as I was showing you before, clearly making making lower highs, lower lows. Now it's time to join the ranks of the bulls, okay, searching for long entries since they are obviously in control here. So zooming into the 15-minute chart, what I've seen is basically my typical breakout pullback continuation, which is, it's here, of course. It's a textbook breakup pullback continuation. Key level once again for today, 20100, waiting for a breakout to the upside of as the London market opens up. London market opens up right there, okay, at that vertical line. We see quite a momentum breakout. It's important to read price action, guys, especially around breakout levels. Have a look. 1, 2, 3, 4 consecutive long green bars in a row, okay, with short wicks, okay, full bodies, no wicks, no wicks like in this candle here, okay, no wicks such as in this candle here, etc., etc. We are seeing long bars to the upside, okay. Have a look at those long bars. The breakout is taking place in momentum. Then we have a pullback.
Sometimes it's geopolitical, sometimes it's institutional buying and selling. News events change price. There is more demand or more supply the next morning, depending on whether it's good or bad news.
So it just jumps like that.
Just jumps like that. So, I mean, somebody has revalued it for some reason. It closed tonight at $6.30. Acme, CNBC comes out and says, oh, Acme beat the street. They're doing a fabulous job. We think this stock should go up to $12. What's going to happen when the brokers come to work the next morning? There's going to be 1 million buy orders, aren't there?
Before the market opens.
Before the market opens.
And that determines.
And they see that and they go, well, the demand is really high and we only have a limited supply. Should we sell it for $6.30 or should we sell it for $7?
Pips, not worth it, really, not worth it. The news announcements are always a lottery to trade through the news announcements. By the way, it's right now 12:30, so the news announcements are probably hitting the wires right now. We'll see how price reacts of that news ballot. But like I say, the news announcements are always a lottery, especially important ones affecting employment, affecting inflation, retail sales, etc., etc. I dislike trading through the news announcements. And anyway, as I was saying, I was risking basically 40 pips. I was sitting at plus 40 in order to gain 20. It's not worth it. Okay, it's common sense. Just as we apply money management rules before entering the trade, well, why not following the same approach once we are in the trade? Okay, if you are sitting in profits you're almost about to hit or not far away from hitting your final target, and a news announcement are hitting the wires, well, perhaps it's not worth it to give all those pips, or to risk giving all those pips back to the market. Perhaps it's better just to be conservative, pocket out those. Wow, have a look at that. Seems like I took the right decision. You see, guys, this is
Organization like Goldman Sachs doing the buying. It could be the general public doing the buying. All these, but there's a valuation change overnight due to news. That's what causes gaps.
It could go the other way also.
Yeah, absolutely. Gaps up, gaps down. Yeah, it could be bad news. Alrighty. Look at today. I mean, the Dow closed at whatever it did above 10,000 on Friday. It may close, it gapped real low today. The S&Ps broke 1,100, all based on what? Terrorism or payback, revenge in the Middle East, somebody blowing somebody up. Okay, back to level 2. The last column is our share size. And on this particular platform, we have full share size displayed. Some platforms divide by round lots. In other words, they divide by 100. A round lot is 100, 200, 500, 1,000, okay? So you might see a platform that says 25, 30, 97, or 10. You have to mentally add 2 zeros to it, okay? Now, level 2 only displays round numbers. So they round down. So this guy down here, we see Bear Stearns, 629, 100. he might really want to buy as much as 199. But they round down to 100. If he wanted to buy 250, it would just say 200. They don't show you the odd lot. Everybody with me on that? Now, obviously, market makers like Bear Stearns and Goldman Sachs, they don't have a 99 tucked in there. They're saying 5,000. They don't have time for that nonsense. But an individual trader, you may get stuck occasionally. You bought 200 shares and you sold 50 and you still have 150. Well, you'd only show up on level 2 showing
here we got a breakout to the up. Let me clean up the chart a little bit. Sorry, guys. I know I'm a little bit messy with my videos, but nonetheless, let me clean up the chart. All right, we had this trending range here. Sorry, this sideways range. We got the breakout, another range breakout, another range breakout. Now we're seeing another range. Why not search for another breakout? All right. The last 3 days worth of price action. Okay, this week has been clearly trending up. All right. As I was saying, making higher highs and higher lows, so why not search for another breakout to the upside? Unfortunately, like I say, it's a little bit too late for my taste, okay? So I'm gonna stop considering any possible entry on this setup, but nonetheless, I think it's a good example to show you the basics of the London of how to set up a London open breakout type of setup, okay? What the main requirements, other than having a trendy week, okay, let's say 3 days is enough, all right, to have a clear trending, to consider the week trending, okay. As you can see, the moving averages are not quite parallel to each other, etc., etc. In fact, we've just come from a downtrend, okay. Have a look at those moving averages, which got broken there and there. Have a look.
Ask, and then I'll put them together and I'll show you how they work. The other column, the right-hand column, is called the ask or the offer. We refer to it as the offer because it's easier to say. Say ask 6 times in a row and you might become offensive to some people, okay? Or you could say it was a cruel man that put the letter S in the word lisp, okay? Anyhow, these people are offering their stock for sale. They are not selling. They are hopeful sellers. Just like these are hopeful buyers, these guys are patient, hopeful sellers. Now, the ask is set up opposite of the bid. Here we have the lowest price at the top, and each color band, the price gets higher and higher and higher. And if we were to scroll down, everybody see the scroll bar over here? If I were to scroll all the way down here, somebody's offering this stock for $100. Okay? Is he going to get filled? No, he's not competitive. Again, we have the same symbols, MPIDs in here, the names. And by the way, we can highlight them. You'll notice that I have GSCO, Goldman Sachs, highlighted here. This just helps us keep an eye on them. I'll show you how to do that. And they're selling $8, or hoping to sell $8.89. Okay? Goldman Sachs says he wants to sell 1,000 of it. People, Goldman Sachs has never sold or bought 1,000 of anything. 10,000, 100,000, 10 million. Goldman Sachs is probably the single largest institutional trader in the United States. They're the ones that feed Fidelity and Ben Franklin and Templeton and Oppenheimer and Janus and all the Putnam and all the other ones.
They're over here also.
Yes, they're a market maker, and we're going to get into that. Al has noted that Goldman Sachs shows up on the bid and on the ask. The name market maker. They must make a market. That means they must be willing to buy and they must be willing to sell, and we're going to tear that definition apart here in a minute. Okay, next. Again, we only see 2 digits. Okay, there may be 3 or 4, but like I say, there's going to come a time when they're going to rule that it's going to be exactly 1 penny or maybe a nickel. Okay, and again, we see our share size displayed as full size. Nothing is said or done without a purpose. And if I happen to know the biggest of the sellers in the market is selling right now at $8.89, I know one thing for sure: I'm not going to buy. Okay? You don't wrestle a 900-pound gorilla. If he's selling, I'm not buying. Does that mean I'm selling short? Depends on situation. He may be buying and selling now to take a profit and the thing's going to go higher. I wouldn't want to sell short. Okay? But if I bought along with him and he's now selling, should I be selling? Uh-huh. And people, this is the first concept in easy tactics. I'm getting a little off base here. But let's say this stock opened at $8 this morning. And after 15 minutes, we see Goldman Sachs buying $8.10. And 20 minutes go by and he's buying $8.30. And 15 minutes go by and he's buying $8.50. And another 20 minutes go by and he's buying $8.86. What is Goldman Sachs doing? He's accumulating. Very good, Ken. He's buying it up. And doesn't he pretty much have to buy it? I mean, if he didn't have to buy it, would he pay ever higher prices every few minutes? Or would he wait for the price to come back down tomorrow or the next day? So he must have a need. We don't know what that need is. Now, it could be an institution that says, Goldman Sachs, you must get us 100,000 shares of Acme right now to cover our fiduciary responsibility. I don't care what price you get it for. We've got to have it to make our business run right. Okay, boss, I'll go out and I'll start buying it. I'll try to get you the best deal. But you understand, if I buy it all morning long, the price is going to go up. They go, we understand that. Does it matter what the reason is? No. If I see this happening, what am I going to do? Am I going to buy with him or am I going to sell against him? Buy with him. And then as Dave pointed out, what if a few minutes later we see Goldman Sachs show up at the inside ask as a seller? We bought it with him at $8.20. Are we going to take our profit off the table? You bet. If he's selling, I'm selling. Now, it might go up again. I can buy it again. That's what I do for a living, people. I buy, I sell, I buy, I sell, I buy, I sell, I buy, I sell. I don't buy and hope that Goldman Sachs will go away. Okay? I'm not going to buy in the face of all adversity. The last thing I want to do is look at an NFL defensive line. Hut, hut. Oh my God, that guy's arm's bigger than I am. Okay, you know, I'm not worried about how much he weighs. His calf is bigger than me. Okay, you don't do that, people. Obviously, probability is what? Go with the 900-pound gorilla. If he's selling, we're sellers. If he's buying, we're buyers. If we bought and he shows up as a seller, take your profit off and step out of the way. Yes?
So we can assume we've got hopeful buyers and hopeful sellers, but we can assume that those are buying and selling.
People are selling to them and people are buying from them, yes.
And at that price.
Right.
So they're not just hopefuls. We're looking at it assuming that.
Sure, there's, yeah, obviously, when you see this, Cisco as an example, okay, streams at about 65,000 shares per minute, people. Yeah, there's a lot of transactions going on. But now let me explain how level 2 works. And for this, we're going to go over here to the board, okay? And we have a stock market street. It's called Rodeo Drive.
Record this video. It's almost noon London time. Too late to enter any possible trade. Okay, so you know I'm gonna cancel this setup. But nonetheless, I think it was worth it to record this video in order to show you guys what a typical London Open breakout type of setup looks like. Okay, in real time, of course. All right, guys, that's all for this video. Yes, you know, one final line. Be careful with London Open breakouts. It's a profitable type of trading. I know traders, professional traders, I personally know them, that exclusively trade those few hours, first few hours of the London Open, and they make a living out of it. But it's a difficult technique. Okay, it's.
They are called what? Pawn shops? They buy stuff. Everybody with me? Okay, on the right-hand side of the street, there's some other businesses. And these guys are called retailers. And they do what? They sell stuff. Now, on this side of the street, These people pay the most, and these people pay the least. Everybody with me so far? That like the bid? Highest price at the top, lowest at the bottom, right? On this side, it's the opposite. These people sell for the cheapest price, and these guys are the luxury. These are the most expensive people. Now, the public goes up and down the street, and the public has different needs. As they drive their cars along, they stop and they go, hey, I like that. I think I'll go in here and buy some. And they may buy some from this retailer. Now, he's the cheapest. Is he going to get the most business? Yeah. But what if somebody really wants the expensive stuff? He may turn in here and pay a little bit more premium, huh? Why would they do that? Well, they wouldn't. But there's always somebody who will. You got somebody on your block that went out and bought a Maserati because it does 265 miles an hour. That's illegal in the United States. Why would you buy a car that goes 250 miles an hour? You can only go 65, maybe 70 in some states, but certainly not 250, huh? Other people are driving by and they have stuff they don't want anymore. And they want to sell it. They want to get the most they can for it. So who's going to get the most business here? The pawn shop at the top. So this guy is buying wholesale, okay? But this guy is a discounter, isn't he? He's cheaper. And this guy is almost the dump. He only pays penny on the dollar for it. So as the public goes up and down, they buy and they sell from these guys. Everybody with me? So who's active? The public is. So here we have the public. And they're going up and down the street. And they're the active participants.
This thing has rocketed off. If you guys remember, entry was around there. It's moved plus 70 pips in profit right now. It's a beautiful trade. What can I say, guys? I wish all the trades were like this. Nonetheless, I'm seeing a little bit of consolidation going through in the 15-minute chart. It's been about an hour and a half, almost 2 hours. We've been consolidating sideways. I don't know if you guys can. Let me zoom in a little bit. I don't know if you guys can see that. Okay, you see that consolidation area? The thing is that we are approaching the noon hour in London, and as you guys know, I dislike trading beyond that time. So I've moved my stop to below this level.
Shop, aren't I? And I'm paying the same price, so I'm going to get the same amount of business he is. But I'm not as big as Merrill Lynch, so I can take a couple of sales and close my doors for the day. I've done my business. What am I going to do then? I'm going to cross the street and I'm going to set up a retail operation called Mike. And I'm going to sell that. And I bought 500 shares and I go across the street and I wait for the public to pull in and I sell 500 shares for a profit. If that's enough money, I close my doors for the day and I'm done. That's called trading, people. Now, do you think this is Goldman Sachs and this is Goldman Sachs, that this is Merrill Lynch and this is Merrill Lynch? It's exactly what they do, people. They buy from the public at discount. They mark it up and sell it back to the public at retail. That's all they do. They're merchants. They make it easy for you to buy and sell. They're a market maker. They make a market. Now, the question is get my plurality here straightened out. Does the bid ever buy from the ask? Occasionally. Does the ask ever sell to the bidders? Occasionally. But that's not what they're doing. What they're doing is buying and selling to the public. Now remember, what is level 2, people? It is nothing but hopes and dreams. These people wish to buy. These people wish to sell. Do they buy and do they sell? Well, they don't have to get filled, do they? The public, these guys say, we're buying $8.88, and the public says, well, we just don't want to sell today. Well, they can wish all day long, and they're not going to get filled. They have to what? Raise their price if they wish to get filled. Alrighty? So
it's rather a continuation type of trade, okay? I only look into the last 2-3 days worth of price action, okay? As you know, Tokyo is the quietest of all trade.
the reality of it is they don't have to be filled. Okay? Level 2 is the leftovers of the market. Okay? Trish over here, she wants to sell $50. Ken wants to buy $50. Trade's done. That doesn't show up on level 2. They found each other in cyberspace, made a deal, and the transaction is done. Okay? Thomas wants to sell 51, and Cy wants to buy 51. Trade's done. Doesn't show up on here. But then as we go a little bit further, okay, we find he wants to sell 52 and Dave wants to buy 51. Uh-oh, now we have a difference of opinion. These guys were all matched. So now he wants to sell 52s. He goes and stands at the ask. So he's standing here now at the ask on the right-hand side going, selling 52s, selling 52s. David walks over to this side of the room. He puts his back to him and says, buying 51s. They're not talking to each other anymore. He wants to sell 52s. He wants to buy 51s. Can we make a deal? No. Then you have to do what? Go somewhere else. So he's going to the public trying to sell 52s. David's going to the public saying buying 51s. Don't worry about limit or market. Do you understand the concept? Good. Okay. Now, if you state a price, you are at limit. You're not saying, I'm willing to buy at any price. You're saying, I'm buying 51. If you were willing to buy at any price, he would have filled you.
But you wouldn't have your backs to each other.
Exactly. You would have already made the transaction.
And that's part of the system also, it's obligatory that that order be filled if it was like that, right?
At market?
Yeah.
Well, okay, there is nothing guaranteed in trading. But yeah, 99 and 100% of the time, a market order is filled within just a few seconds. Okay? And because obviously they can take advantage of it and they're going to work to their own advantage. But there's no guarantee. I mean, again, if there was a nuclear cloud over the Pentagon, you could try to sell all the 888 you want. Nobody would buy them. Okay, you put a market order in, the market would probably be closed for the day in morning and everything else, and you'd still be pending on a market order and didn't get your fill because it was just so horrific. So I can't guarantee 100% anything in trading. I may have a plan that goes beyond Goldman Sachs' needs. And if it's, certainly again, do I want to buy when I know Goldman Sachs is selling? No. But what if Goldman Sachs says he's selling but is not? Can I determine that? And the answer is yes. People, as traders, you've got to learn to become detectives.
It's just the breakout. The three aspects of any breakout are the breakout thrust, the pullback to previous resistance levels, okay, and the continuation. All right, triggering my short entry as we make new lows. All right, so since this is the let's zoom to the 15-minute chart. For a clearer view, I'm just basically looking for a breakout, okay, as soon as London opens.
Hi. Guys remember Columbo? Peter Falk and the old raincoat and the nasty-looking cigar? What was Columbo's gig? He would talk you until you died of boredom, okay, and then he would leave. And as he would leave, he'd go, Cy, no more questions. No more questions. You've been a great help. I've talked to you about my basset hound. I've talked to you about all this. You're dying. I'm leaving. And he would walk away and he'd go, but one more question. And then you would go, I confess to the murder. I just can't take you anymore, that smelly cigar.
Pullback and a continuation. All right, it's like I say, it's basically the same type of trading methodology that you guys see me trading every day. Okay. All right, posting the video now, and I'll keep you updated. Bye bye.
We start getting into tactics. We got a mile to go, people, before we start to get into that stuff. Let's get over this. What is the point of level 2? Well, now you get to see what's going on. We have the depth. Don't look at the 89s and the 88s. Look at what
12:35. Stop loss right above there, above the pullback aspect, and the 212.50 around a number. All right. Okay, let's see how these things goes. Bye bye. Hi guys, it's me again. Just a
This particular shot, and I don't want to get into this in great detail, but does everybody see that there's an awful lot of people at $8.90 who are willing to sell? Okay, so if I bought this stock early this morning for $8 and it's late in the day, and I see Goldman Sachs there at $8.89, and I see all these people trying to sell their product at $8.90, am I going to sell it to the guys at $8.88, or am I going to hope in the last 2 minutes it's going up to $9? I'm going to take the $8.88. I bought it for $8, I make 88 cents. I don't want to get caught in hoping because I have resistance. I have a huge pool of supply here at the 890s. Now, they may not be telling me the truth, but it's late in the day. Am I going to take a chance that all these guys are going to cancel their orders and the price is going to go up? Or do I know in my heart of hearts that the price is going to stall right here and I've got the 900-pound gorilla flexing his muscles? Take the profit, people. If it goes up, you can always buy it again, or we wait till tomorrow. But the chances of it right now have more of a chance of going down. There's more players with very large share size. Does everybody see that? How far can it fall? Now, this isn't a very good shot here, guys, because it's static and it's kind of a cheapish stock. But does everybody see that down here at 886, we see JP Morgan showing 25,000. We see Merrill Lynch with 7,700. We see Attain with 3,100. Where's this stock really going to go? We know it's not going to go up much above 890, but could I also say it's not going to go much below 886 for the same reasons? Now I have a tremendous amount of demand down. Who's down here? Our 900-pound gorilla. He says, I'll take it all. I'll buy 1,000 shares, and we know he's not telling us the truth, okay? That he's just putting up a number. He may buy 100,000. He might buy 1,000,000. But his very presence is a support line because he knows that everybody watches him. I know it. You guys now know it. And we're going to use it to our best advantage as we go through this course. Everybody with me so far? Cool. Again, I'm using Goldman Sachs as an example. It could be any particular hammer. And Goldman Sachs is not the biggest player in all stocks. So, because we're going to limit ourselves to only 1 or 2 stocks or 3 or 4, we're going to know who the big players in there. And it might be Morgan Stanley. It might be Merrill Lynch. It may not. I don't want you to fixate on Goldman Sachs. I just pick on him because he is one of the biggest. But he only plays maybe 2,000 stocks out of the universe of 3,500 on NASDAQ, and call it 12,000 if you throw in New York.
Okay, I'm just gonna let this thing run to its full potential target, and I'll keep on updating whether I get stopped out or my final target is hit. Okay, all right, bye bye.
Things we have to look at. So the punchline to this is what? Well, with level 2 and direct access, we start to have the power of our routing. As you can see up here on the bid, I have Island highlighted at 1707. Well, perhaps I'm a club member of Island, and now I can join the bid right along with Charles Schwab or a Merrill Lynch or a TD Waterhouse. People, in 1997, we found out that we have the same rights as they do. Our dollar spends just as well as theirs does. They may have more dollars, okay, but their $1 is no more valuable than mine. So I have the right to go into the market. Now, understand that under constitutional law, we are not allowed to trade real property without a license. You guys all know this. If you've bought or sold a home or a business, you have to have a real estate broker. And when it says homes for sale by owner, that's not true. There may not be a real estate retail broker, but you still have to go through an escrow. There has to be a deed recording and all that. Now everything has to be certified by somebody with a license who blesses it. Same is true here. You and I cannot trade Cisco. That's buying real property. That's ownership in a corporation. without a license. How do we do that? We're going to borrow that license from our direct access trading brokerage. And we're going to do it through an ECN, an electronic communication network. Don't worry about the definitions. We're going to get all those. But if I'm a club member to the Island Club, I can go over here to the bid and buy 1707s, which is wholesale right now. Once I buy them, can I post my offer to sell at 1708? Yes, I can. These are not the same people. These are just the same club. These people think it's time to buy. These people think it's time to sell. Now, when we just look at this, we do not know. Is this one guy with 700 shares, or is it 7 guys with 100 shares? There's a way to tell, and I'll show you how to do that when we get into the platform. But do you understand that there's just a difference of opinion here? You ready? So we get to buy on the bid or sell on the ask. People, that is not the most important thing about level 2. The most important thing is that we can see what's going on. We have the transparency of the market. There are many times when you will be just delighted to pay retail and buy 1708s and not even mess around with the bid. What if the good news hits the stock and you're sitting over there at 1707 and the ask goes 1708, 1709, 1710, 1720, 1718, 19, and you're still sitting there going, gosh, I'd like to buy at 1707? We're talking about level 2 here. The importance of level 2 is in immediate risk management. People, at the moment of transaction, every trade should be a scalp. And by that, I mean, I don't care whether you're going to buy it and a second later you're going to sell it, or you're going to buy it and a week later you're going to sell it. At the moment you buy it, do you want to get the best price? Well, please, somebody nod your heads. Yeah, of course we do. And at the moment we sell it, do we want to sell it for the most? Of course we do, okay? So at the moment of transaction, we always want to try to get it. I had a student say to me, Mike, all I want to do is buy it on Monday for $50 and sell it on Friday for $60, and I'll be happy. And I said, well, that's great. But of course, if I'm going to do it, on Monday I'm going to buy it for $49.74. And when you sell it for $60 on Friday, I'm going to sell it for $60.23. I'm going to be happy. I'm going to be happier. Why am I going to be happier? Because I made more money? No, because I was more efficient. I did a better job at what I do, and that's called trading. That's what I do for a living, people. You ready? So
this case is clearly up, all right? Just have a look at the individual days ranges, all right? It's clearly that we are having an upward
possibility on Friday that you're selling it for $60, but by looking at level 2, I can sell it for $60.13 in 2 minutes from now by seeing where it could possibly go. And the answer to that is yes. That's what we use it for. Now, as we look at this screen up here, we can see that there's a whole bunch of buyers gathering here at 888. By the way, I didn't say this earlier, but generally traders only talk in the pennies. So this is trading 88 by 89, huh? We don't actually say $8.88. We just say 88s by 89s. So you start to get used to the lingo. You ready? So we can see that there's a whole bunch of people gathering to buy at the 88s. But people, is there an effective difference between 88 cents and 87?
Yeah.
Really?
A little.
A little bit. There's a penny's worth. That's how much there is. Exactly. There's a penny's worth, okay? In sentiment, that isn't much. You know, on 1,000 shares, that's $10. That's not much, is it? If you're buying $88,000 worth of stock, is an extra $10 much of a matter to you? No. My point is don't get hooked up in just looking at the top of level 2. The whole page is there for you to look at. And as we look at this, does everybody see, in the same shot we just looked at, does everybody see at 886 we have JP Morgan down there showing 25,000 shares? Okay? And if we look over here, we can see at 890, we see GVRC with 10,000 shares. And a little bit below that, we see Island there with 9,900 shares. I want to look to see where it can possibly move to, where it can possibly go, okay? And then, is there any indication that it's going there? Now, that we need other indication. People, level 2 is a very, very important tool, but it's not the most important. When I go to war, I want to have more than one arrow in my quiver. I want to have a handful of arrows. When I go to war, I want a big shield. I want a long sword, I want a short sword, I want a dagger, I want a chariot, I want some great big horses, I want a driver, I want a real big ugly man with a hammer. When I go to war, I want it all, okay? I don't want just one thing. But unfortunately, guys, I can only talk about one thing at a time. So understand that as we go a little bit further, you're going to start to see how level 2 becomes a central player in other information and allow us to make better and more refined decisions. Everybody with me? Good. Now, this gives you an idea. First off, if you guys look up at the top left up there, you'll see it says live. We almost cut it off, but I don't want you to think this is a demo. Does everybody see where it says live up here? This is a real trade sheet. And generally by now, somebody has already fixated on the closed profit and loss. How much is this guy up for the day so far? $7,600, $78.44. Okay? What time is it in New York? Basically 11 a.m. How long has the market been open? Hour and a half, hour 27, hour and a half, right? Now, I just want to check you guys' expectations. Is $7,600 every hour and a half good enough for you guys? Is that okay? Is that enough? Okay. Well, okay, well, what if it was only $7,000 every hour and a half? Would that be okay? All right. Let's take a look at this here. Forget about the price. Let's talk about what this guy's doing. How many stocks is he trading? One. Why do you think he's trading one stock? Yeah, that's what Trish said. He knows this stock. He studies it. He knows who the hammer in it is, who the hammers are. It may be more than one, huh? We were talking about Goldman Sachs, but as I suggested, what if it's J.P. Morgan? What if it's a Knight Trimark? What if it's somebody else? Do we need to know that? How far does the stock move on average per day? When does it move? Does it move in jerks? Does it move up a penny at a time, or does it jump around in 25-cent gaps? Would that be helpful to know those things? That's why he plays one stock. Is he in there with large share size? No, isn't that amazing? Everybody thinks you have to go out there and throw 3, 4, 5,000 shares around. No, you don't. If you have the right stock and you're in the right situation, you can get away with around 500 or a couple of hundred shares. Bill's over there trying to calculate exactly.
It's finally pushing up. Now it's 4 a.m. Euro time. We are already in the very late end of the Euro session, okay, of the London session. The American market is already opened, and I am not ready.
I want you to look at this sheet from a different perspective. Forget about the money or what he's doing. Look at what has happened. Okay, he's playing one stock, minor to minimal share size. Okay, look over here on the profit and loss. What is making him the $7,600? Is it all these green ones, or is it a lack of red ones? Lack of red ones, very good. People, he's making $250. He's making $50. He's making $21.94. He's making $384. He's making $562. His biggest loser is only $85.94. $18.75, $62.50, and $78.13. Is this guy making money, or is he not losing it? He's not losing it. Come on, this is what it's all about. How many tickets has this gentleman done today? I say gentleman, by the way, it happens to be a guy named Merlin Rothfeld, okay? But he's done 137 tickets in an hour and a half. We only see, what, 20, 30 transactions here. This page goes down here, people. Okay? Now let's talk about that. Mike, isn't that a lot of commissions? Is that a reasonable question? 137 tickets?
Absolutely.
Okay, well, what if he was paying $20 a commission, $20 a ticket? Would that be a high commission? That's fairly, okay? So what's 20 times 137? Is that 2,600 bucks, plus or minus 2,700? 2,600 from 7,600 is how much? 5,000.
Trust, and then upon this point, okay, I am basically looking as usual for a pullback, retrace, however you want to call it, and a continuation taking off to the upside. Instead of that, the pullback actually dives all the way back down to the bottom of the Asian range, okay, this triangle right here. You see, current live price is 241.96, and I was basically looking for a rebound of the 242.20 area. So this was just a quick video to show you the importance of not triggering your entries as the breakout fires off. Okay.
What you're making, you don't have to worry about commissions. Does everybody see up here where it says average ticket or ticket average is 56.05? What if his commissions were $50 per ticket? That would be outrageous in today's world, wouldn't it be? You wouldn't pay $50, but what if you did? That means he's netting $6.05 per ticket. What is 6 times 137? Is that about $700, $800? Would you guys be okay with $700 or $800 every hour? Is there anybody in here who's making more than $700 an hour? Okay? I mean, besides me? Okay? So, you understand what I'm trying to say here, people? Don't get caught up. I'm not here to teach you how to be a high-speed momentum trader. This is just one style. But look at what he's doing. One stock, limited share size, so he's not taking any exotic risks. Keep those losers small. As soon as he sees they start to lose, he's out of the trade. He closes it. He's allowed to buy and sell, buy and sell, buy and sell. People, there are only 4 outcomes to a trade. You can have a big winner. You can have a small winner. You can have a small loser. And unfortunately, you can have a big loser. Guys, do you understand that if we can kill number 4 down there, if we can eradicate it, that we don't take any big losers, that we're going to make money? Small winners cancel out small losers. Big winners pay for the transactions and leave money left over. You ready? You are expected to take small losers. Losers are part of trading. Small ones are. Small losers are part of successful trading. You can't call the market 10 out of 10 times. You'll be lucky if you can call it 5 out of 10 times. But if you keep those losers small, okay, you'll find that over time you are profitable. People, I am here to teach you how to make a living every day, not how to hit home runs. Everybody knows about Babe Ruth and Sammy Sosa and all these big hitters. You also realize that they're the strikeout kings. Their batting averages aren't national championships. Their home run count is. The other problem with striking out as a Major League Baseball player, Sammy Sosa, do you think they take money away from him when he strikes out? Or do you think they give him a bonus when he hits one over the fence? No, okay. But what happens when you strike out? Costs you big time, people. You can't afford to be swinging at the fences. Not yet. Wait till you have some of their money in your account. Then you can afford, remember the coin, we can take a bigger risk, and therefore we can afford a bigger reward. Okay, but meanwhile, this is going to be our world. Big winners, small losers, no big losers. This is the key to successful trading, okay? And the only way you're going to do this is with a plan. And that plan must include trade stops, stop losses. And there's a whole bunch of different kinds. We're going to explore them in detail, people. There's the initial stop, the break-even stop, the stop market, stop limit. We have trailing stops. We have buy stops and sell stops. But what do we really have to work on? The discipline to use it. I'm not telling you guys anything new. What I have to get into you is that you've got to draw that line in the sand and not cross it. I bought this thing for $25. If it gets down to $24.75, that's all I'm willing to lose. You don't let it go down to $24 and hope it comes back up. You say, I'll take my small loser right now, and if it goes back up, I'll buy it again and I'll make my money back. I'll either have a small winner or a big winner. That's what I'm looking for. Do I know I'm going to get it? No. But you don't know it's going to come back either. And hope is not the answer, people. Everybody with me? Okay, so this is kind of a punchline, if you will, for direct access. Okay? You want to stay in the online brokerage system? They handle your orders. They either transact, internalize, or sell your orders. You may not be getting the national best bidder offer. With direct access, you place your order directly in the market. You control who you sell to or buy from. You can use an automatic transmission. I talked about all these different routes, but people, I'm going to make it easy for you. I'm going to give you a computer that will find you the best price, the cheapest way, and the fastest way, and you don't even have to think about it. Okay? We've got that kind of technology now.